All right, investors. So let's talk about NBIS for a minute because a lot has happened. And if you're following the AI infrastructure space, this one's getting interesting. First, price check. NBIS is sitting around 84.64 after a pretty heavy dip from where it was trading earlier. So yeah, volatility is real here, but dips like this also open up entries if you believe in the story. So what's the story? NBIS, Nebius Group, is basically building the backbone of AI, massive GPU farms, AI-ready data centers, cloud infrastructure. Think of it as the plumbing underneath all the AI hype. And the guy running this, Arkady Volos, pronounced Arkady Volos. I can't say it. He's one of the founders of Yandex, basically the Google of Russia. That's why people watch him closely. Brilliant, experienced, but carries some geopolitical baggage from his Yandex days. Either way, he's not some rookie CEO who stumbled into AI. He knows how to scale huge tech systems. Now, what changed recently and why NBIS suddenly got on everyone's radar is the partnerships. First, Microsoft, a multi-year AI infrastructure deal worth up to 17.4 billion with another 2 billion in optional capacity. Wow, that alone would have been enough to move this stock. Then Meta, a 3 billion contract over 5 years for Nebius to supply AI infrastructure. You don't get two hyperscalers knocking unless your tech actually works. Now here's the reality check, the last earnings. In Q3 2025, they pulled in 146 million in revenue, which is a big jump, but they also posted roughly 120 million in losses. And they announced an at-the-market ATM plan to sell up to 25 million new shares. So dilution, yes, it's on the table. Profitable? Not yet. This is a true growth phase company. They are spending aggressively to build capacity before these monster contracts fully kick in. But there is upside for the bold. The global demand for AI compute is exploding. You've seen the NVI earnings. Every company wants GPUs. Every startup wants training power. Hyperscalers are scaling faster than data centers can be built. Nebius is directly positioned in that bottleneck. And if they actually hit their run rate targets, they're talking about 7 to 9 billion annualized revenue by the end of 2026. The valuation looks completely different. So here's how I frame it. If you want safety and stability, NBIS is not that. If dilution scares you, NBIS isn't your play. But if you're looking for a high-risk, high-reward infrastructure moonshot backed by a real contract with Microsoft and Meta, then yeah, NBIS is one to keep on your radar. Personally, I'm watching execution. If they deliver even half of what they promised, then this dip could age very, very well.